Good day, students. I hope that you had a wonderful day. Okay, and today we want to talk about a few things, particularly the disposal of an asset. But before I start discussing that, I want to point out a few areas that I didn't discuss in the last lesson on the accrual concept. In the last lesson, I did not mention expenses. I mentioned only credit sales and credit purchases and depreciation. Okay, but you have other items such as expenses, salaries, telephone and eating, which are used in the based on the accrual concept to earn income. They facilitate the process of earning income. Okay. Now depreciation is no exception, except that it is not a cash item. Okay, but it is used, the machinery or the equipment is used in earning the income. However, it is spread across the many periods or years that the income is earned, right? For example, a portion, which is called depreciation, represent the amount that is used in a particular year to earn the income for that year. Okay, so I just want to clarify that. Now let us discuss the disposal of an asset, and I want to do this by using an illustration in terms of the journal entries, a disposal account, and a calculation. Okay, now in a disposal account you have, I'm speaking in terms of the journal entry, you have to debit the disposal account and credit the machinery and equipment account. What this does is effectively you are transferring the sale of the machine. You're taking or deducting from the machinery account the original value. It indicates the original value. So you're removing that value from the machinery account to indicate that the machine is sold or disposed of. Okay? Sorry. The second item is the accumulated depreciation of machinery and equipment account, right? So you debit this amount and credit disposal account. So what you're doing here is that you are removing the total depreciation amount for the original value to reflect the book value. So when you deduct 80 from 110, it reflects the book value. I'll explain more of that later. Okay, and then the other item, the third item, is that you're booking the disposal proceeds. So you're debiting cash and crediting disposal account. Now I know this you may not use to, this is just a simplistic illustration. You might use to another method, but I'm using a simple journal entry so that you can understand the movement or the movements of the entries. Okay, now and I've used a disposal account here to illustrate a T account, particularly a T account, sometimes when you don't understand, the journal entry, it is best to write to a T account to demonstrate. However, I just use the disposable account here, right? I also use a calculation. Now, the disposal account is similar to the calculation right here at the bottom, right here, right? So what you're basically doing, you're taking $110,000, which is the original cost. You're minusing the 80,000, right? The 110,000 equivalent to the debit. The accumulated depreciation is equivalent to the credit, and you're minusing the 80,000, right, to get the book value of the asset. Right? When you get the book value of the asset, it's time for you to calculate the profit. So you're minusing the 40,000 from the 30, the 30,000 from the 40 to arrive at a profit of 10,000. Now, for those who still do not understand what we have done here, there's a simpler example at the bottom, right? To simplify the illustration here. You have the original value. You're minusing the accumulated depreciation to arrive at the book value. And you're minusing the proceed. So what you receive is a profit on disposal. Okay? Now, I know students, even after this explanation, they might still be confused about the entire concept, right? In particular, the calculation of the profit. Now, what I mean by this, some students might ask the question, why the calculation is not, we could take the 110,000, or we could post the 110,000 in the income statement. Why is the income statement does not include the 110,000? However, you can't do this because, as we mentioned earlier, you have to take a portion which represent the usage of the machine. Now, the usage of the machine is not only in 1 year. If it were only in 1 year, then you could do that calculation. You could minus it within the year, okay, if it's only used in 1 year. However, it's not used in 1 year, it's used over many years. So you could not include the total amount in the income statement, right? The other question would be, you could even go, some companies might think that they can just, do not, avoid charging depreciation. It is not possible to do this, right? Because if you should sell the asset, then it might show a loss. Now, you can't report a loss because the tax department will have problem with this. You have to add it back when you're calculating. You have to add it back when you're calculating your taxes. Okay. The other complication I think that student might have, or the other question I think student might ask, is why is it we calculate depreciation and not, instead of having a market value to calculate the reduction in value of the asset. So take, for example, we could seek the market value of this asset, right? And then compare the previous period market value with this period market value. to find out the deep reduction in value. Okay, we say for example we could do that. Now if you do that, it would be cumbersome and cumbersome, expensive, and time consuming, right? So now you can see where charging depreciation is justified over that, because you can, for example, you can find a market value for a car. It might be difficult to find a market value for certain equipment, right? So it's easier to use depreciation. You can choose any method of depreciation, right? However, you have to show the reduction in value, which is called depreciation, in the account for each year, right? One reason is that the tax department will not allow you to post the original value, entire amount of the original value, to the accounts, right? So I hope this has cleared up a few misunderstandings, right? And I hope this has helped you somewhat. Thank you for watching, and I'll see you soon.